First of all, I'd like to welcome all the participants of the World Investment Forum that are tuning in on our live platform. Welcome to this special session, 2.5-hour workshop with IOSCO, featuring security market regulators from around the world, discussing sustainable investment. This is a rapidly moving area that has certainly evolved tremendously just in the last few years. So without further ado, I'd like to introduce our opening speakers. Our first speaker is Mr. James Zahn, the Director of Investment Enterprise at UNCTAD and the host of the World Investment Forum here in Geneva. James, the floor is yours.
Thank you, Anthony. Mr. Omran, Mr. Maloney, eminent panelists, ladies and gentlemen, welcome to the World Investment Forum. This forum is totally virtual due to the pandemic, but we have 95 high-level events, and this event is one of the highlights of the World Investment Forum 2021. First of all, I would like to congratulate Martin Maloney on his recent appointment as the Secretary General of IOSCO. UNCTAD and IOSCO have a long record of collaboration, and we look forward to continuing that collaboration with you, Martin, in the years ahead. And I wish you great success in your leadership for this very important organization. And I think that together we share an interest in transparency in a well-regulated market that facilitates investment in sustainable development. Investing in sustainable development, of course, includes investing in emerging markets as one of its core aspects. That is why that I'm also happy to be speaking to you alongside with Dr. Mohammed Omran, with whom we have a long history of collaboration going back over a decade when he was running this Egyptian exchange. And in fact, he was also instrumental as one of the 5 founding members of the UN Sustainable Stock Exchange Initiative back to 2009. In 2018, Dr. Omran was served as the chair of our UN advisory group on how security regulators can promote sustainable development. And under his leadership, we launched a guidance on this topic at World Investment Forum 2018. Today, 3 years later, I'm very pleased to see that the tremendous momentum among securities regulators to address sustainable finance. Indeed, one of the notable developments in this year's World Investment Forum discussion is how much the scope of what we call sustainable finance has expanded over the last few years. So today, sustainability is being integrated into all corners of the market system. Just yesterday, UNCTAD Sustainable Stock Exchanges Initiative announced the launch of its new derivatives exchange network, welcoming derivatives exchanges as full members of the SSEs for the first time, with 11 of the world's largest derivatives exchanges as founding members. And Anthony here is instrumental for that initiative. And Anthony, you remember very well that back to the early days when we launched the Sustainable Stock Exchange Initiative, we had only 5, including Omran's exchanges. We know that it is the responsibility of policymakers to set policies and the responsibility of the regulators to standardize and implement policy. Over the past decade, that UNCTAD and IOSCO have worked together, and we have seen the emergence of a global policy consensus around sustainable finance. And this builds on the key policy agreements coming out of the Paris Climate Summit and UNCTAD Sustainable Development Goals. So the policy is clear, and we must transition our global economy to the net zero emission economy. And we must strive to achieve the UN Sustainable Development Goals, especially in emerging markets. And that I see that the Emerging Market Committee of IOSCO and under the leadership of Mohammed is instrumental in this respect. Of course, these things will not happen without a large amounts of the investment, value in the trillions of dollars. So sustainable finance is a key mechanism for us to achieve the world that we all want to have. So everywhere we look, we see sustainable finance taking over markets, and it is the fastest growing area of finance across many asset classes. And in fact, according to our statistics in our World Investment Report, sustainable themed funds increased significantly. And in fact, it's increased by over 80%, even during the pandemic of 2020, as compared to 35% of decline of global FDI. So that shows that the market is growing rapidly. And that includes private equity funds, green bonds, social bonds, and all these, and also the capital markets that I'm talking about, the exchanges. So, but to be truly mainstream, it must be codified into regulations. Therefore, the important work of IOSCO and the national security regulators worldwide. So you face many challenges, such as ensuring transparency in markets that face new types of sustainability-related systemic risks, and ensuring investor protection in an era where greenwashing and other non-standardized language about sustainability persists. Just to give you an example, recently we compiled a database of 4,000 self-labeled sustainable development funds. And out of that, we found out that only 8,900 provided reports on their performance. And out of that, it was only 2/3 have meaningful performance indicators. So today we are going to launch issue the awards to the winners of the funds out of the 800 that are reporting, and with a view, with an objective of disseminating best practices to this community. But in the meantime, I think there's a lot of work for the regulators to do in this area. I have no doubt that today's discussion will be a kind of fascinating exploration of this fast-moving area. And I want to, again, say that UNCTAD stands with you in your efforts and look forward to continuing our support to your work. So before I hand over to Mohammed, who joins us today to provide opening remarks and to set the scene of the session, I'd like to commend the role of the Growth and Emerging Markets Committee within IOSCO. And for many years, this committee played an important pioneering role in the sustainability work in IOSCO. And I think that leadership from the emerging market underscores the critical importance of investment for sustainable development, which is the core theme of the World Investment Forum. So at UNCTAD, my colleagues, Anthony and me, we are committed to continue to work with you. Thank you, and look forward for the following discussion. Over to you, Mohammed.
Thank you, James, very much for the nice invitation for arranging for this panel and workshop concerning the World Investment Forum and inviting the IOSCO and the GEMC to be part of this very important discussion. I would like also to thank our Secretary General, Martin, as well as our hero behind the 3 reports on sustainable task forces, working group 1, 2, and 3, in which I think that the IOSCO has done a great job in this area. And of course, as you mentioned, James, our relationship goes back to 2009. It's more than a decade now, when we have the Sustainable Stock Exchange initiatives. And then back into 2018, when we did produce this report, I'm not sure whether you can see it or not. This is about how securities regulators can support the Sustainable Development Goals, in which it was one of the first reports talking about the role of regulators on supporting the SDG by the year 2030. And my colleagues from the IOSCO, they do understand, when I first joined the board back in 2018, when I take over the chairmanship on the Financial Regulatory Authority, I was pushing toward the sustainability as one of the most important topics should be discussed within the board of the IOSCO. And I'm very glad to see that this has been done very quickly and has been done in a very comprehensive manner. When I keep reading the report done by the chair of the Sustainable Task Force, I got to understand more and more how effective this work is. And as you mentioned, that we have a challenge as a regulator, policymaker, stakeholders, and the entire market participant is how to achieve the sustainable development goals by the year 2030. And then according to the climate change agreement back in Paris 2015, how the entire world can achieve the net zero carbon emission by the year 2050. Of course, we need a huge trillions and trillions of dollars to be mobilized from the traditional economy or conventional economy to go to the green economy. And this is a challenge. The challenge we are facing is not only how to fill the funding gap, but also how to make sure that we are mobilizing this huge funding needed to the right project and to the right companies. And here is when I come back at the part of the first report by Eric and his team, and I can read the objectives, the principle of IOSCO, the principle 16 of the IOSCO objectives, and the principles of security regulations, which stated that there should be a full, accurate, and timely disclosure of financial risk and other information which is material to investors' decisions. And here was IOSCO is concerned about. We're concerned about a very important issue, which has been highlighted in the conclusion, which is summarized in the board of directors of IOSCO in February 2021, when they were mentioning that what I can call it 3 C's R&A. The 3 C's is that we need about sustainability to have complete consistency and comparability in the sustainability reports, as well as reliability, as well as the auditability of the sustainability reports. So the challenges we have now is how to make sure that across countries or across jurisdictions, across industries and across firms, investors can understand and the quality of the report that they have, and they take investment decisions so they will not have a problem or the risk of mispricing or the risk of the greenwashing. So the reality, we are facing a very important problem is how to make sure that we have a basic guidelines for sustainability, a basic guidelines for disclosure on the task force and climate-related financial disclosure, as well as for the ESG, because this is a key issue. So we will not have a problem with the mispricing or the risk of the greenwashing. I understand now that the IFRS is working, I'm not sure whether it has been done or not, to create the sustainability, the International Sustainability Standards Board, which has a mandate to set the baseline for the disclosure about the ESG, as well as for the task force in climate-related financial disclosure. And I understand that the IOSCO is keeping a very close eyes on the progress which is happening there. And this will be the first step to have international standards that every jurisdictions every regulator and every industry and every country will take that and devote some sort of nationalization for this guideline that is needed. So I do understand that we have a change ahead of us. I understand that the regulators are under pressures, as well as the policymakers, asset managers, the stakeholders, that we need to find a way of how to get a baseline about the disclosure requirement. I think this is very important to us, and I do understand that today we have a very two important panels. The first one is about the sustainability related issuer disclosure, and Martin will lead the discussion about that as a moderator. And the second panel that we have is about the asset managers, greenwashing, ESG rating, and data providers. And Anthony will lead the discussion, and he is the moderator about that. I'm quite confident that the outcome for this two workshop will be instrumental for the IOSCO as well as for the UNCTAD. And I will stop here, and I wish all of you a very fruitful discussion, and we are looking forward for getting more information and more guidelines from these two panels. Thank you very much.
Thank you very much, Dr. Amran. Thank you, Mohammed. It's good to see you again. It's a pleasure to have been working with you for over the past decade, where we've seen so much tremendous progress in this area of sustainable finance. So I think now we're ready to go on to the first panel, and of course we're very honored to have with us to moderate the first panel Martin Maloney, the Secretary General of IOSCO. And Martin, I will leave it to you to introduce your own panel, and the floor is yours.
Thank you very much. I'm very struck by Mohammed's remarks and how they have really summarized the issues that we face very effectively. And it's really a good introduction. But I'm also struck, Anthony, by Earl and James's record of work over the last decade in this area. And many people who have worked in this area over that decade will be maybe pleasantly surprised at how much progress has been made. And I suspect how it is dawning on many, perhaps a bit late, how central finance is to pushing forward this sustainability agenda. But if it is a little late, it's better late than never. And your work has bred good results, it seems to me, and we're at a very interesting point now. And the point at which we're at is where we have an industry that is looking for systemic corporate reporting standards, and is looking for that to be done in a way that fills data gaps that they're critically aware of, that really improves pricing, that prevents people from cherry picking how they disclose and so on, and that actually begins to create sort of databases that we can all rely on in terms of understanding trends and patterns throughout the globe. And I'm particularly happy to follow Mohammed in leading this panel, because the work of GEM in this has been a part of that pioneering effort and has really shone a light as to what was the way forward for the whole of the global financial markets. What we want to discuss on this panel a little bit is IOSCO's vision for a global baseline for making that transition to systemic and consistent reporting across the globe, particularly focused on climate. And I think we want, though, in this particular panel to really bring out the differing experiences in some key countries. And for that reason, I am particularly happy to have the panel that I have got today, where we will get that broad range of experience. I want to welcome in particular my colleague at the IOSCO board, Eric Thieden, Director General of Finansinspektion Sweden. He is the chair of our Sustainable Finance Task Force and has done a huge amount of work in this area. With us also from Egypt is the head of sustainable development in the Financial Regulatory Authority, Sina Habus, who I think has some interesting developments to share with us from Egypt. And certainly last but not least, is Shenbing from the CSRC in China, who is the Director General of the Department of International Affairs there in the China Securities Regulatory Commission. You are all extremely welcome, and let's push ahead with the discussion. And let me start by going straight to you, Shen, because the CSRC has issued, if I understand it correctly, some interesting additional reporting requirements for publicly listed companies. And these include quite significantly enhanced ESG disclosures. And I wonder, could you provide us with an overview of the key parameters you've considered for the framework to meet investor needs? And given the intense activity at international level around disclosures relating to climate and other ESG factors, I'd be particularly interested in what your views are as to how your new regulations build from international work and how they will fit in and accommodate the developments that we now begin to see emerging on the horizon.
Thank you very much, Martin. And also, it's my great pleasure to participate in this forum. And also, I would like to thank James and Mohammed for their very inspiring opening remarks. I think, as for the question Martin raised, I think I'll give a very brief introduction to what we have recently released in China. Actually, it is to put it simply, it is a realignment of our reporting standards in terms of environmental related disclosure, as well as corporate governance disclosure. In the past, these requirements actually are scattered in different regulations and the requirements. And in this year, we actually consolidate all these requirements with some updates and released our requirement for annual report and semi-annual report. The key element actually relating to environment is some mandatory disclosure requirement for those companies with, I would say, with more kind of polluting risks. And these, for this, we actually work together closely with our natural resources and environmental agency authorities, and they will actually designate, a list of companies that might have larger emission of pollutants or other polluting risks. And for those companies which has a bigger environmental impact or externality, so there's a mandatory requirement for those companies to disclose environmental information. And also their compliance with environment protection requirement, or otherwise any penalties received from the national authorities. This is a very clear mandatory requirement, and also refer to specific companies. It's not all companies, not all public companies, but partially. At the same time, secondly, we adopt, apply, or explain requirements for the remaining listed companies. Actually, the other companies will actually, they are not have a mandatory obligation, but they also need to they need to make environmental disclosure according to the same requirement. But if they decided not to disclose, they need to explain why they don't do so. And third element is other, besides those information closely related to environment protection, and they may voluntarily, all companies, all listed companies, they may voluntarily disclose other information regarding the protection of environment, prevention of pollution, or fulfillment of environmental protection obligations. So these are the three key elements of the E part of the new standards. On the governance side, I will be brief. On the governance side, it's mainly actually a consolidation of all governance issues, and it's in line with our corporate governance standards for public companies. By issuing these, I think that it's one important progress made by the regulatory authority in China to actually probe into the sustainability issue. But I would say it's still quite preliminary. And the sustainability issue, where IOSCO covered, actually the report and the leadership of Eric, I think, actually cover comprehensively what are the issues we are looking at. I think it's much broader than what we have been doing so, but we fully support and commit ourselves to also cover those issues. Regarding the challenges, actually, I think there are, as an big emerging economy, I think one challenge is that currently the standards, the local standard, is not broad enough, as I mentioned earlier, not broad enough to cover all the issues, investors' concerns. And secondly, as China actually have a strong initiative for green economy, for the carbon emission peak and neutrality, there's still large room to be covered for the transitional risk of all the listed companies. So maybe some companies are in some areas that may be affected significantly by those new initiatives. Some companies may benefit very much from those new policies. So for this area, I think that is some area we need to work harder to be in line with the comprehensive package we are now working on together with other IOSCO colleagues. And so I think that's briefly my response, and I'm happy to discuss further if you have any other questions.
Shen, that's really interesting, and I will want to come back to you in a minute to talk about how you think that's going to develop in China over the next period. But I mean, before I do that, one of the things that strikes me from what you say is many other jurisdictions, and I'm sure Eric will recall this from our report, will be very familiar with these choices you've had to make between voluntary, comply or explain, and compulsory. And those are very important policy choices that are being made in different jurisdictions around the world at this time. And you've explained very clearly the point that you've reached in China in developing that framework, which is particularly interesting. I think I should turn to Sina now to maybe let's try and compare the situation a little bit in Egypt in a non-competitive way, obviously. Let's see how things are going in Egypt, because my understanding is the FRA in Egypt has issued regulations requiring companies listed on the Egyptian stock exchange and some companies, I think, operating in non-financial bank activities to submit ESG disclosure reports and related to sustainability. Give us your views, if you could, Sina, on what the challenges are actually facing companies now in trying to report under these new rules.
Yes. I think there's many types of challenges. There's challenges that face companies, and there's also challenges that face authorities like us. One of the challenges that we had is how to design the ESG matrices. We also included TCFD, which is the first of its kind in the region. And we also had a major challenge. One of the challenges that we face is the availability of information, accurate data. reliable modeling customized for the country. We also faced issues with regards to how can you convince the companies that what we are doing or demanding and requiring is of importance and is actually not a sort of an additional sort of mandatory requirement. So what's the business case for ESG? These kind of questions might not be familiar to you, or it's in a much earlier stage in countries in Europe, but these are very real questions that we have. So it was a challenge for us not to complicate the required indicators or make similarly to TCFD. So we, for example, we did not take all the provisions or what is required or recommended by TCFD. We took what would be easy for companies to comply with. So we were not able, for example, to enforce the provisions concerning the analysis and projection, more detailed things, because again, we have a challenge in the market is accessing reliable data. So for us as a regulator, we want to work very closely with different governments, with different policymakers in order to remove these kinds of hurdles. Because again, if we really want companies to comply, or if we want companies to even develop a more aggressive agenda when it comes to ESG or TCFD, we need to provide them with the required support. So it's not only a matter of regulations, sometimes it's the whole conditions, enabling conditions that is required, and sometimes it's beyond the role of an authority to do it on its own. As for the companies, another challenge was that they needed more information on how to institutionalize sustainability in the first place. How can they become sustainable institutions in themselves, so they would be able or prepped to offer green products, green facilities, and to be able to disclose on their own strategies. So we also, using these kind of regulations, we sort of indirectly encourage companies to start institutionalizing sustainability, to have an environmental policy, to have a social policy, to understand efficient management of resources internally and externally. Another, of course, challenge that we're facing is risk, climate risk. And this is, I consider, the biggest hurdle we have. Again, and goes back to the same conditions, which is the availability of data, of understanding, of even linking it to the business case to companies. These are all challenges that we are trying to work on, and we're trying to provide trainings for companies because they will be asked to start mandatory disclosure by the end of 2022. And accordingly, we're trying to take this phase by providing them with enough training, understanding of what's happening. We're also finalizing guidelines for ESG, and hopefully we'll be doing the same for the TCFD provisions to provide them with as much as possible help in these areas. And we're also selling the same idea to different sectors and to different public institutions, because again, success calls for having different public institutions harmonize and understand the same challenges. And hopefully, for example, the central bank in Egypt is now considering the idea of the same kind of regulations, and we're also helping them in this regard. So the idea of harmonizing regulations, so be able to have a stronger financial sector overall, not just the non-banking financial sector versus the banking financial sector, working together with the private sector to provide them with the enabling conditions is very, very, very important. Also building local expertise when it comes to sustainable finance, climate management. All of these are very important because companies lack the experts and the personnel that be able to helm these initiatives, and they'll be able to successfully integrate them on a daily basis in the overall operational work of the company. And after all, this is why we're having all of this in the first place, is to ensure that companies are moving ahead towards a path of sustainable finance and towards net zero or green or circular economy. Accordingly, this is also a challenge that we're trying to address through support of international governments, international regulations, organizations, to give us this kind of support. So this is in a nutshell what we are facing right now.
It almost makes one feel sorry for the companies, because clearly the challenges are quite substantial, really, aren't they? And I'm sure Shen would probably say that companies in China face similar kinds of challenges in dealing with the change in regulations in China. I mean, I'm struck by the range of issues you've raised. You know, you've raised the question of data. You've raised the question of the broader ecosystem within which they operate and how difficult that is. And you've raised the question of coordination with other sectors and other regulators, and the question of expertise. There's no doubt that regulators can provide some assistance in terms of guidance, as you've tried to provide, but some of this is outside our control. And I wonder, what's your sense, Asina, just before I go on to Dr. Eric, about okay, in 2022, this becomes mandatory, if I understand correctly. Do you see a path to feasibility for your companies to actually meet this target within that timeline?
Yes, because again, we made sure that the provided or the requested kind of indicators are not that difficult. The social ones are easy to comply with. Maybe the most challenging ones have to do with the climate and the environment. And now we're providing them with the support required. So I think it's doable. We also have a strong condition for companies. We did not mandate or issue the regulation target all companies. No, we have only focused on larger companies with the idea that if we have market champions, they can lead the way and would provide leadership for other companies, smaller companies to follow through. So we have this targeting of larger companies, 100 million Egyptian pounds as a net equity or issued capital as a minimum. So this is also an idea for us to make sure that these companies are capable of doing this. But again, this is a question that I think many emerging economies or institutions, regulators in emerging economies would face. The question is, if we are regulating a market that is considered yet starting in the journey of sustainable finance or sustainability, and the world is moving very fast, what to do? Shall we stay in the phase of awareness, introduction, or shall we move on? Because sometimes companies do not do things voluntarily. And this is the questions we have. Maybe we should act first or regulate first, and then we can provide them with the required momentum of education, capacity building, hand in hand. Because again, the regulation here is not only about mandating or imposing, it's about creating how can I say, a directed, accelerated momentum for them to move on. Because again, we want the market to align as fast as possible to international global standards and requirements.
Well, that's a perfect opportunity for me to bring in Eric, because Eric, I'm quite struck by both what Shen was saying, what Sina was saying, that there are very deliberate and careful choices being made at a policy level within jurisdictions in order to define a target they want to aim at and to make progress, backed up by a real sort of can-do attitude in relation to this. But at the same time, and I know you're very much at the heart of this work, the target that countries are aiming at is moving, and it's changing all the time. And IOSCO is doing a lot of quite detailed work in this area, and you're cooperating with other entities that are working. Can we take a few minutes just to help our listeners, to watchers, to kind of understand the dynamic, where it's come from, where it's going, what's important within what's going on at the moment? And maybe you might reflect a bit, if you share my view, that both these Egyptian and Chinese examples are actually very illustrative of the sort of issues I think that people are facing in practice. What do you think, Eric?
No, thank you very much, Martin, and thank you for the introduction. It's really interesting and engaging to listen to, the experience from China and Egypt. And of course, I have also, let's say, a personal experience from my country, and it differs, but it's also a lot of similarities. But let me start to run through a little bit on where we are on the IOSCO kind of task force, what we've done, what we're looking forward to do in the future. And then reflect on some of the issues that you point at, the can maybe a little bit of the choices you need to do going into this. But generally speaking, IOSCO, and I think, to be honest, to say we were behind the curve. We did too little when it comes to sustainable finance. We actually had some pressure from the outside world asking where IOSCO was on the sustainability map. Of course, the GEM committee, now chaired by Mohammed Omar from Egypt, was issuing their report ahead of kind of the full work that we have done now through the full membership of IOSCO. So we started with a network, and what we found out in that network is very much kind of been based for what we have done in the coming years, and that was that there was a lot of things going on. It was a lot of momentum in sustainable finance, but it was kind of very, very hard to navigate. So many of you have heard of the expression alphabetic soup, that there were so many different standards. And what is green? You know, is it green in China the same as green in UK? It's very, very hard to navigate, even within the country, what is green. And I think this created a lot of problems. One is, of course, greenwashing and consumer protection issues. But it's also, I think, the maybe more important question is the financial risk and the how we could help the financial sector to become a part of the solution of climate change rather than one of the problems. But I like to think about this as this is the core of the market economy, because if you don't get in the right price signals to the market, they will price assets wrong. Okay, so and I think Mark Carney have said, and probably many others, that what we were looking for here is to bring the future into the present. So if I look on an investment, I should understand the risks in that investment fast forwarding in 20 years. Let's say I'm investing in, the extreme example would be a coal energy plant, but it could also be, let's say, a car manufacturer or a mining company. I must understand what kind of risk I'm facing when policy shifts will come and I can't emission any CO2 any longer. So if I get that price signals into the present, then of course the private capital will flow away from CO2 high emission investments into low emission initiatives. So that's the whole idea. So to me, being an economist by training, I think it's an extremely important. Sustainable finance is actually the core of what economists talk about when they talk about the importance of price signals and all that. But a few more words about the project and where we are now. So basically, it was strong signals in the questionnaires and other outreach we had with the markets that we need to do something. And this was one of the few moments I've realized that actually markets are coming to regulators and asking, please regulate. So that will probably never happen again, but it happened this time. So there's a lot of important stakeholders actually saying you need to bring some order into this. And we had then had some choices to do. And that's coming back a little bit to the discussion you had we had with Sina and Shen. We said climate first, because we thought that, you could argue most urgent. It's also the most global issue. And as IOSCO is a global organization, it makes more sense to go for climate rather maybe than social, which could vary in different countries what you prioritize. So that was the first priority we said. Then we started to have a lot of discussions with various organizations, and very early, it's IFRS was the organization that stood out as the most relevant one to sort out the governance issue, because as they have already kind of the governance and the metrics and the system for financial reporting under the well-known IFRS standards. They were also exploring. Actually, they were also behind the curve, as IOSCO were. So there were two behind the curve organizations that started to talk to each other. But important organization that actually could do something to change this. So IFRS also issued questionnaires and asked relevant stakeholders, and basically gave the same answers that we got. This is the alphabetic soup. You need to have more standards. So they could bring in, let's say, the governance, the credibility. But where do we get the standard? Should we start from scratch? No, there was, of course, an alphabetic soup. So there were some letters out there in this soup that we could actually bring in and try to join forces. And that's exactly what is happening now. So this is what we like to phrase that we are trying to get a running start. So we have already standards, already metrics, already experts working with this. We try to join forces, or we, it's actually IFRS, but you could say it under the oversight of IOSCO. So that is happening. They're also trying now to establish this ISSB, which Mohammed already mentioned. So the Sustainability Standards Board. We hope that will be announced soon, and hopefully, without my, I don't know the exact timetable, but hopefully we'll get some kind of messaging around that at COP26. So then we have the governance, we have the metrics, the standards through these collaboration, but between the 5 major, let's say, private standards that were already out there, including SASB and others. And of course, they are also based on TCFD. It's important because sometimes we go, oh no, I actually support TCFD. Well, TCFD is actually incorporated in this, and TCFD as an organization are strongly supporting this initiative. So it's not they're not working against each other, but rather together with each other. So where we are now and running into COP26 is that there's been one climate prototype already launched. There's a second one to be launched. This is the standards board to be hopefully be set up with all the governance structure around it. There should be some kind of leadership appointed. We don't know when that's going to happen, but it should be some kind of location. Where should they be? So there's been a bidding competition here, and that's some decision to be announced by IFRS. And then coming back to IOSCO, it's up to us to oversee and bring in the public interest to this. And eventually, coming into 2022, there will be a discussion in the board of IOSCO whether we should endorse the metrics, the standards coming out of the ISSB. And an endorsement by the board would be a pathway to bring it into local standards, legislation, or so standards, or how this could be handled different in different jurisdictions. But that would be the way to have this actually as this global baseline. There's still a lot of challenges. Many of the things I'm saying now is what I hope, what I think, but the probability I haven't said anything about, because that will, I think, sort itself out in the coming weeks or months, because I think the COP26 will be extremely important. Of course, also the board of IOSCO need to, have a discussion around this, to unify and to agree on some kind of standpoint in this. But I think we can't get away from the original problem that we're trying to solve, which is we don't want to have the alphabetic soup. We need to have some kind of baseline in order to solve a global problem. So anyone that argues, no, we could actually have our local standards, they're actually saying, no, we don't want to solve, the major problem here, which is, if you're talking about climate, of course, the climate change and the risks that we all face, whether we are in China, in Egypt, or in Sweden. We have a colder climate, but I can assure you that it's getting warmer in Sweden as well, substantially warmer. So we definitely see the effects of of climate change also in Sweden. So that's basic where we are. Just say a few words on the things that you mentioned.
Please do.
What you experience in Egypt and in China is very much, I think, when we started this, there were a lot of some stakeholders. I said that many were asking us to regulate, but there was also some that would say, no, it's actually good to have different standards. It creates a dynamic. You don't want to pick a winner. If you choose the wrong winner, you might be worse off. So there is a dynamic here that is important, I think. So maybe part of this that you're facing in China and Egypt, where you're kind of trying to find your way, is not so bad, because it's actually important also to do that, to have that dynamic, because otherwise you might go too soon into a hard regulation. And you should also be aware that the developing countries, including the European Union, are actually going into now compulsory regulation in a pretty late stage. So to get the overall financial statement right, to get some kind of sustainability reporting in, I think is a very good way. What I think is important, which if I understood you correctly, Shen, I think it's important to get the climate change issues in, and not only the emissioners, but also the transition risk, because that is, of course, a very, very important risk. What happens to an energy company, a car company, a clothing company, when the energy mix changes from fossil to non-fossil. So that is what we I think there is a difference here, but hopefully also the emerging countries will de facto be able to take the baseline. That's what we are hoping for, but of course realizing that we to some extent are coming from different kind of backgrounds. And I have, maybe to end, it's not that all the European companies are saying, well, this is fantastic, we want to have more metrics and more standards so we could do even more reporting. Of course, this is a balancing act also in this part of the world, that some companies would think that this is too much of reporting. And probably all the debate we have in Europe about the taxonomy, is that too ambitious, too detailed? Without being an expert in it, I think it's a very relevant discussion to have, because of course regulations and metrics are not the answer to everything. But that maybe as an intro, Martin, I think I'll stop there.
Eric, that's actually great, and it really, I think, gives people the sense that we're at a turning point, an important turning point, and 2022 is going to be a really interesting year in terms of getting a baseline into place, and probably the alphabet soup won't disappear overnight, but we will be in a significantly different environment, I suspect, when that happens. Shen, I wanted to come back to you, because one of the things that strikes me about this debate is sustainability reporting is key to the whole debate. And China's a huge market with a very complex market, and I'm wondering, from where you sit, what's your perspective on the coverage of ESG investments in emerging markets, and how that is likely to unfold over the next period? Because after all, if this reporting is not used, if it doesn't actually work in markets like yours, having put the effort in, then we have a problem. So what's your perspective on how you think things will develop over the next period?
Yeah, I think, thank you, Martin, and it's a very good question. And as you mentioned, China's market has grown very fast in the recent years, and the other characteristic is that the market becomes more and more open to the global investors. One good thing that for the sustainability's sake is that global investors also attach great importance to sustainability and green investment. So actually in the past years, I think there's great demand. Actually, I think if you compare with local domestic investors and the global investors, I think that demand for green investment is even stronger from international investors. But now it's also has caught attention for both investors home and abroad. And there's a second point I'd like to mention is taking China as an example, that there's great potential for ESG investment, given the national strategy to lead a green economy, and also the the need for investment to shift the energy mix, as Eric mentioned. According to some estimation by financial firms, I think because we set standards to 2030 and 2060, and by the year 2060 there might be a need for investment of over 20 trillion US dollars. There's some estimation for China only. So that's if you look at the emerging economies around the globe, that might be more significant number for investment. So that actually provide opportunities for investment in this sustainability area. So that gave a rise to the importance of disclosure standards and all other issues we discussed earlier. If there's no comparable and complete data or information available, that might be a different scenario for the investors to look at these issues. But for emerging economies like China and also other markets, I think similar, is the challenge is that for the transition to a greener economy, compared with the advanced advanced economy, developed economy. So we have the so-called the double challenge. On one hand, there's lack of investment in the past. If you look at Europe, there's already tremendous investment in the past decades for environment, for the energy structure and other environmental issues. But there's lack of investment. That's one challenge. Might be availability of capital is limited, restricted. The other thing is all the the changing of the standards challenge, as we discussed earlier. So for emerging economies, we have to deal with one the real economy issue, and the other thing is how we come up quickly to the international standards. So I think that doing that better would be a very important ground for more and more sustainable investment from both local and international in ESG. So that's my response.
Shen, that's very interesting, and the numbers you quote there, I think they're particularly relevant, because sometimes in these debates, I think we can fall into the trap of thinking this is a compliance matter. That everybody just has to tick these boxes and then sort of move on. But actually, there's a massive real economy capital raising program here at a global level, which can be clearly seen coming. And it's crucial to the fundamental economic role of capital markets that they would play their role. And in fact, one way of looking at what we're doing is helping to make capital markets fit for purpose, to help raise that money in the right way. That's Eric. I might come back to you in a minute, but first I want to go to Sina. But I wanted to come back to you quickly in a minute, just to pick up on Shen's points, really, because that's a great summary of a classic emerging market dilemma that can be faced. And I'd be interested in a second in your view. But before I do that, Sina, I was talking to Mohammed the other day, and he was telling me about the Regional Center for Sustainable Finance that you've got in Egypt. And I'm particularly curious from the point of view of our watchers and listeners as to how the center is going to help issuers in Egypt to implement these new standards that we're talking about and contribute to investor education. Maybe just a couple of minutes as the clock ticks down on us on that would be helpful to people.
Yes, okay. So the whole idea of the center is based on what is required for the market, and not only the Egyptian market, because part of what we've been doing is, and part of the Egypt's positioning is that Egypt has a lot of contacts, lots of relations with different counterparts, regulatory bodies within the region. We hold a lot of investment and events that encourages companies in the private sector from other regions as well to join. And we've noticed that all countries in the region, the MENA region, and even in Africa, they face more or less the same problems, whether the need for capacity building, the creation or nurturing of expertise within the private sector, so they'd be able to manage and navigate and understand the sustainable finance dimension of the market, what is needed. So the center is working on this. Basically, is providing research, providing capacity building, and we have a very strong ambition to enlist the help of international institutions. Again, we don't want to reinvent the wheel, and work very hard on trying to build the capacity building of companies, so they enable them to, as I've said before, to align with what is needed on a global level. We also like to engage policymakers across countries, again, with the idea of not to work on developing local policy agendas on their own, but at least to harmonize what's happening. A third point that I am very keen on is how to have a unified stand, a cluster of negotiation, understanding of what is needed in the region, and how this can be aligned and heard in international platforms like COP26, COP27, any kind of platform. I think this is something that I personally even find it a little bit frustrating, that sometimes we do not have a unified voice of what we need to expedite the process of sustainable finance policies, or to encourage the development of the economies and market respectively, and voice our needs to our counterparts. And I think this is very, very, very important, because we do have unique set of challenges, and we need to help, or we need to address these challenges, and we need to highlight it to the global community, so they would help, and so they would understand that if we are all to move in a unified manner on a global level, that there is an acknowledgement that there is unique challenges, different accompanied to different clusters in the region, and this is very important. So these are the three main objectives of the center. Accordingly, we'll be working on helping countries, counterparts, and partnerships to achieve these. I want to also, yes, I want to build on the idea of ESG investments, and this is something very important and key that we discussed. And from our experience, when it comes to issuance of green bonds, we had the first corporate green bonds issuance in Egypt in 2021 by the largest bank in Egypt, and IFC, with $100 million issuance. And we also had in 2020 the first sovereign green bonds. The main challenge, and something Dr. Muhammad Omran has just mentioned, is not always about the finance and the capital. It's about the other side. And this brings us to the idea of having a systemic approach to the economy. Lots of keen investors, global investors, foreign investors, and now even local investors are interested in ESG investment opportunities. But how can we provide them with the pipeline and the existence of projects that they can invest in? And I think this is where there is a little bit of a need for coordination, appropriate planning, and understanding that the market is, or the economy at large, is a systemic approach, that we need all of us to work together to start the transition towards green, circular, net zero, and provide new industries. Accordingly, the investors would be able to invest in appropriate opportunities. And this is one of the challenges we have, that we don't have enough opportunities. We actually have interested investors more than the interested pipeline. The government now is pledging through the different ministries that there is a need for more green, defining green projects, and how can the government support in the provision or the expansion of a green portfolio, because this is very, very important. Another point is that how can we engage smaller companies, not only bigger companies that are willing to invest, for example, in green mega projects. No, we want opportunities for smaller companies to start thinking of investing in. So having a diversified portfolio. This is something.
Sina, you're setting an agenda of questions that we could go on for another hour on without the slightest difficulty, I suspect, and I suspect every one of my panelists would have substantial views on them. And I think the points you're making illustrate how challenging the way forward is. I just wanted to come back to Eric, maybe for a quick reflection, Eric, if you had anything to add, because I think both Shen and Sina have set out very dynamic and powerful perspectives of how strong emerging markets are dealing with this issue and really engaging with it. Is there any thought that you have, particularly from your seat at the IOSCO board, in relation to particularly these areas that we're really interested in IOSCO, in capacity building and helping emerging markets to make these transitions? Is there anything you've heard that makes you, that drew particularly your attention in relation to the dilemmas emerging markets are facing?
No, but one reflection is that sometimes we discussed in the board, and then we discussed, let's say, derivatives markets, or stock exchange regulation, or whatever. And it's clear that there are some markets that are substantially bigger than others, London, New York, and it's relevant that they might have a little bit more say in those questions. When it comes to green gas emission, that is of course not true. China is a big emitter, a lot of other emerging markets are, as well as of course the developed world. So here we are in an equal footing when it comes to the problem and actually what's causing the problem. So we need to bring in every perspective and not only kind of the developed market because they have bigger markets. No, that's not true, because it's actually more relevant to, excuse me for this, Shannon, but it's more relevant to bring in China to this than to bring in Sweden, of course, because you have a so much larger country. So that's one general reflection, i.e. it's extremely important to have emerging markets perspective and the drive and the engagement from you into this different projects that we now are engaging in. So I think that may be what I could say. And of course, then the capacity building goes without saying. It then becomes extremely important to work also with capacity building.
Yeah, I think we all, I suppose, share the hope that at COP26 in a few weeks' time, all those different perspectives will be very clearly on the table and very well articulated, and the progress that is made in dealing with what you might call the political side of the issue is really strong, because everything we're doing in the finance sector, I guess, depends upon and relates to that, and the two have to go forward hand in hand for success. But what I've heard here on this panel has been really strong progress, both in China and in Egypt, in relation to this. And maybe that's the message that should go out to everyone who's watching this panel, that emerging markets are not waiting for someone to finish and develop the final complete package that will allow you to push forward. In fact, markets like China, very strikingly, and Egypt as well, have actually picked up the cudgels here and are moving forward with revising, progressing, and indeed are not only have made progress, but understand that there is more progress to be made and are strongly engaged in looking forward to the next phase. I want to thank all of my panelists for this session, which has been very, very interesting. Shen, thank you very much. Sina, thank you. And thank you to Eric for bringing that IOSCO board perspective. I hope it's been informative for our audience. And I will pass back at this point, and I might get a chance to say a few words at the end of the session again. Anthony, I think I'll pass back to you for moving on to the next stage, having thanked my panelists.
Yep. Thank you very much, Martin. And that was a really excellent first panel. I think everybody in the audience appreciated that. I know I was taking a lot of notes. Again, as it was said in the opening comments, this is a dynamic, fast-moving area. And so there's of course a lot going on, and there's a lot of big questions about how to properly regulate this space. So with that, we have on the agenda a brief break of just a couple of minutes, because this is a 2.5-hour long session. So it's a little bit longer than our usual sessions of the World Investment Forum. So we want to give those people watching at home a chance to maybe refresh, grab a drink, and come back to us. We're going to start the next panel in exactly 5 minutes. So please join us then. Okay, welcome everyone back to this workshop with IOSCO, the International Organization for Security Commissions. It's the regulatory workshop looking at sustainable investment. My name is Anthony Miller from UNCTAD. I'm the coordinator of the Sustainable Stock Exchange Initiative. It's my honor to moderate this second panel session where we have with us today a number of experts from around the world who will share their thoughts on this very rapid transformation of economies around the world, and of course the financial markets that support them, and what does that mean for securities market regulation. So we have with us today Mark Manning from the UK Financial Service, the UK FCA. Sorry, Mark, I'm so used to using the abbreviation, I start to forget what it means.
That's all. Good to be here.
Yes, and Evert from ESMA, and Bruno from Brazil at the CVM, and Raluca from IOSCO in Madrid. Thank you all for joining us. We have a lot to go through, and we do need to end on time in 1 hour. So I'm not going to dwell too much, but I'll just make a few brief opening comments. I think a lot of this has been said before, but I think it's important to set the stage, particularly for participants who might just be tuning in now for the second session. And that is just that, as has been said, and this is a constant theme throughout the World Investment Forum, is this explosive growth of sustainable finance now. All investment around the world is realigning around a new policy environment that is focused on a transition to net zero economies around the world. In a session I was just on earlier this morning in the bond market, listening to the Enel Corporation, the chief financial officer there, he called this a revolution. It is a revolution when we're transforming the way we produce energy, the way we have our economies function. And this is something that is going to have a ripple effect throughout the financial system, as investors have to be aware of what are potentially systemic risks during this transition. Some will benefit from this transition, others may stumble. And there can be systemic risks in the form of stranded assets in certain industries. So this is a challenging area. What we have seen over the past 2 decades really is this enormous growth of sustainable finance, something that maybe 20 years ago we could look at as a niche industry. Towards the end of the 2010s, the first decade of this century, we started to see it really emerge out of its niche corner as we saw very large institutional investors, very large investment service companies, all the big data companies like Bloomberg or MSCI or FTSE Russells really start to acquire smaller companies that were producing ESG data themselves, start to produce tremendous amounts of ESG data, and asset managers everywhere offering sustainability themed products or investments or services. So with this comes new questions for the marketplace. And this panel is here to discuss what are the regulatory and supervisory expectations for asset managers, but also beyond them, other players in the marketplace, and with an effort to produce an increase in data reliability and transparency. So we can live in a world where we understand what some of these terms mean and that these terms mean something. So with that, we have this great panel from security market regulators around the world. I'm not going to dwell any further. I want to jump right in because there are a lot of questions and not a lot of time. So Mark, if I can start with you, the UK, the FCA, you've had a very busy past year or two on this topic, building on the implementation, the TCFD framework. The FCA has been introducing a sustainability disclosure regime, requiring corporates and financial firms, including asset managers, to disclose their risks and opportunities and impact from this big sustainability transition that we've been talking about. Can you tell us a little bit about the parameters, the key parameters that you've considered for the framework that you're developing, and also what your sense in the run to provide investors and public consistent comparable information to comply with their fiduciary duties? I think this is particularly relevant for asset managers, but also for other institutional investors. And mainly, in your view, are asset managers well equipped to integrate ESG factors in this risk management process?
Thank you very much. And good morning, good evening, wherever you are in the world. Great to be here to discuss this really critical topic. Thanks very much for the question, Anthony. I think, as you say, we've had a busy couple of years as we've been on this journey, particularly in the area of sustainability disclosures. We very much began with climate and implementation of TCFD, but as set out in the government's roadmap to sustainable investing, hot off the press, published just Monday this week, that work is continuing, and we're looking to expand beyond climate and build on the work that we've done in relation to TCFD. So what I might just do in the next few minutes is say a few words about the roadmap and what it's aiming for and our role within it. But I'll also put that into the context of the work that we've been doing on TCFD, which is ongoing. So the government's roadmap really describes a pathway towards economy-wide sustainability disclosure requirements. And this would be right along the investment chain, covering corporates, asset managers and asset owners, and also the products that they're delivering to the market. So given that scope, quite clearly the FCA has an important role within this, and in particular in relation to how the sustainability disclosure requirements, I'm going to use SDR, sorry for another acronym, but just make life easier for the purposes of this discussion. We'll be looking to implement SDR in the context of listed companies and the asset managers and asset owners that we regulate and the products that they deliver. Our aims in implementing this regime are threefold, really. First of all, to increase the provision of sustainability-related financial information along the investment chain, including all the way to consumers. Second, to build trust in the market for ESG and sustainable investment products. And related to that, to help combat greenwashing by better allowing consumers to navigate and validate sustainability claims made by the firms and providers that they purchase services from. So as I say, SDR will build from our implementation of TCFD. We've already implemented TCFD aligned disclosure rules for our most prominent listed companies. They came into force at the beginning of this year, and we've proposed to extend that to a wider scope of listed issuers from the start of next year. But consistent with the recommendations in IOSCO's recent consultation report on asset manager disclosures, we've also proposed TCFD aligned climate related disclosure rules for asset managers and FCA regulated asset owners. And that's what SDR will ultimately build upon for that segment of the market. Under the proposals that we've made for this segment in relation to TCFD, firms would be required to publish annually an entity level TCFD report on how they're taking climate related matters into account in managing investments on behalf of clients and consumers. And supplementing that, they would be required also to publish annually a core baseline set of product and portfolio level disclosures, including metrics related to their scope 1, 2, and eventually scope 3 emissions at the product or portfolio level. So we're aiming to finalize our policy position on this by the end of this year, bringing these rules into effect from the start of next year. We anticipate that SDR will similarly include both entity level and product level disclosures by asset managers and asset owners, and that SDR will take the TCFD's 4 pillars and its recommendations as a starting point, but broadening the scope out beyond climate to other sustainability related information. And also, as I think you mentioned at the outset, Anthony, looking also beyond financial risks and opportunities to also include impacts and aligning disclosures on impacts with the forthcoming UK Green Taxonomy. At the product level, we're considering introducing 2 layers of disclosure. First, a concise and accessible consumer-facing layer of disclosure that would capture key metrics, key ESG-related information, and key characteristics of the product that's on offer. And then a more detailed underlying set of disclosures, which would be aimed primarily at more sophisticated investors, institutional investors, and other stakeholders. So essentially just drilling down that bit more deeply and incorporating a wider set of metrics, for instance. Supported by these disclosures, SDR will also include a sustainability classification and labeling system for investment products. Our thinking is that this would capture the full spectrum of products, so all the way from those that are not making any sustainability claims, but nevertheless consumers may want to know what the sustainability characteristics of those products are, all the way along the spectrum to those that are seeking a real-world impact alongside a financial return. We're going to be seeking feedback on our early thinking in these areas in a discussion paper, which is due to be published next month. So look out for that one. And ultimately, this will help us to inform proposals for consultation next year. Just a couple of really important additional framing points to make. First of all, we want to ensure that any actions we take in this area are internationally consistent. That's been at the cornerstone of our work so far, which is why we've focused our attention to date on the widely accepted TCFD framework. And of course, why we've been so heavily involved in the work that IOSCO has been doing in this space to promote international coordination, consistency, and comparability in sustainability-related disclosures. And in that regard, and sort of with reference back to the previous discussion and some of the remarks that Eric was making, in the roadmap, the UK government confirmed the UK's commitment to the IFRS Foundation's work in this area, clarifying that the forthcoming ISSB standards, International Sustainability Standards Board, building on TCFD, will form a core component of the SDR framework and the backbone of its corporate reporting element. And to deliver this, the UK government will create a mechanism to adopt and endorse ISSB issued standards for use in the UK. So I wanted to make that very, very clear, because that is absolutely underpinning everything that we're going to do further along the investment chain. Just briefly on your second question on asset managers' capabilities in the space, do I have time? Is that okay?
Well, let me come back to that. And I just wanted to interject a couple of questions on what you've said before I go on to everybody else. But you know, there was a couple of things that you pointed out. First of all, it's great to hear this news about the ISSB and the support from your government for that, and that your plan to adopt and implement those standards. That's of course, this is an area that many people are watching for the announcement. We've heard a few things about that in the session prior to this one. A couple of questions. You mentioned that, for example, in the UK, you've already introduced rules, climate disclosure rules for some issuers, but now you're expanding it. So a question there is, on what basis are you deciding which issuers disclose and how you expand that? And do you have a position on differential reporting, for example, for large companies versus SMEs?
Great question. Thank you. So in the UK, we have 2 listing segments. We have premium listed companies, which essentially through their listing commit to a higher degree of transparency in corporate governance. And then we have a standard listed segment, which is a much broader scope of issuer types. And then further, well, first of all, the premium listed companies are all commercial companies. The standard listed segment includes a whole raft of different issuer types, many of which are not commercial companies or indeed operating companies. So our first step was to target climate-related financial disclosures at that premium listed segment. So for instance, all of the FTSE 100 are premium listed companies. It captured in total just under 500 issuers, commercial company issuers who are who have already submitted themselves to a higher standard, essentially. So the proposal that we're now bringing forward, well, we consulted on it in June. That consultation closed in September, and we hope to finalize our policy position by the end of the year. We have expanded into the standard listed segment, but with a focus on issuers of standard listed equity shares. So essentially, again, that targets commercial company issuers. We've asked some questions in our consultation around debt issuers, but it's a very, very heterogeneous set of issuers there, for some of which may, the TCFD framework may not be the optimal framework for disclosure. It includes a whole variety of healthcare trusts, overseas sovereign issuers, etc. So it's a very heterogeneous set, and we're working through the responses to those questions to see if we can find an appropriate framing for that segment of the market.
Well, you know, there's a lot there that I would like to dig into, but I'm conscious of time and I want to get to everybody. So, but I may come back to you, Mark. Particularly, you were talking earlier about labeling system for products, and I certainly want to talk more about products. But let me come back to you on that. In the meantime, I'd like to go to Brazil, to Bruno. Where I work with stock exchanges, we've worked with Eurexchange B3 now for many years, over a decade. They've often been seen as a real pioneer in the space of sustainable finance, and we've seen a huge growth and interest in sustainable finance in Brazil. So clearly, it's a very dynamic market that has also been part of this global trend towards sustainable finance. Can you give us a sense of, from CVM's side, what you're seeing in the marketplace, particularly related to the asset manager side? And what is your view on current challenges now and over the next couple of years?
Okay, thanks a lot to be here speaking for CVM. Well, just a quick disclosure in the beginning that my opinion here in the panel may not correspond to the official opinion of the CVM in Brazil. Well, that's of course a huge theme in Brazil here that we are discussing regarding our regulatory framework, and among with the self-regulators like B3, our stock exchange, and other self-regulators in Brazil. So it's interesting because in the previous panel, the panelists mentioned that regulators and IOSCO are behind the curve, and I believe that many times it's healthy for regulators to be behind the curve and to see what the market is doing and to learn from experience. To now I see that regulators are in a great position to regulate this issue and to put more information for investors to make their decisions. So there are no common standards around the world regarding the what is green or what is social. For example, Eric mentioned this alphabetic soup regarding the taxonomy, and it's complicated for regulators to go first in these cases. But now I see that also IOSCO and IFRS, they are in a good position to put some standards, and also local regulators. And that's what we are doing here in Brazil. We had a new set of rules for public companies in Brazil to take effect in 2022, next year. So that's our first step in the ESG area disclosure. We have not any set of rules for asset managers yet, although we have a lot of green investment funds, social investment funds, green bonds in Brazil. Historically, in the last 10 years, we have a lot of issuances regarding green bonds in Brazil, but we started to regulate and to require more disclosure regarding the public companies, which are part of the investment fund industry portfolio. So just to give some examples, this adequate disclosure for public companies, for example, and for all of the investment is very important to mitigate greenwashing and other possible frauds involving offerings of ESG investments. And this new regulation for the public companies, the listed companies in Brazil, is that they must report separately their social, environmental, and climate risks. We use it to have a common report for all these risks in just one report. So now they have to split, and which will take effect in next year. Also, companies shall disclose how they manage the risks and what they are exposed, of course. So it's a kind of comply or explain why you're not complying with this set of rules, or if it's not applicable to the company to comply, why not? And the companies also must disclose whether they adopt key indicators for social and environment risks, for example. Another interesting disclosure is to whether management compensations are linked to ESG targets and which are these targets. So this is useful information for investors as well. And other small disclosures regarding the difference of compensation among, for example, the highest position to the average position in the company, and difference of compensation regarding gender, race, and color. That's another requirement for the listed companies. I think increased transparency and to set common standards is the main focus of CVM regulation. And we believe that asset managers will see this regulation for investment companies, and will also, by their self-regulators, that they are already respond to the self-regulators. They have a common set of rules that they have to disclose regarding the self-regulators enforcement. So, and regarding investment funds industry, we have one new regulation that will also take effect in next year, is regarding the asset-backed investment funds. We are creating a specific category of social environmental investment funds for this particular investment fund that we see in the past 2 or 3 years is the most common investment funds used to label as green fund or social responsible fund. So we will set a specific category and some standards for the operation of this kind of fund. It's a kind of first step of our regulation in the asset management industry.
Okay, that's very interesting. I mean, certainly a lot of new clarifications, standardization of the language of issuers and their reporting, some reporting requirements around sustainability that will certainly meet investor needs on that. You mentioned just at the end there about really something for the fund industry and regulating that. It sounded a little bit similar to what we just heard from Mark earlier? Is it some sort of labeling system for the fund industry or taxonomy, or what are you doing for them?
Yes, regarding the fund industry, it's this first step is for now, for next year, is just a label, you know, a category of investment fund. So if you have new asset-backed investment funds which labels green or social, they must be incorporated in this new category that we are putting in place for next year. You know, and this new category, they must follow some requirements that the rule, but just small requirements. You know, it's our first experience for this fund industry, and I believe when the listed companies will start to disclose this new set of rules that we are taking effect next year, and the investment managers will start to also disclose more information regarding the investment fund that invests in this public company that they are disclosing this new set of information. And our fund industry in Brazil has a particular specific transparency framework. All investors can see what the investment funds are investing, the individual companies that the fund invests, which amount, which quantity, and also the corporate debts, you know, and other debts that the funds are investing. So it's easy for investors to see exactly what they are investing and to look through the fund and go to the investment company to see which kind of disclosure regarding ESG, for example, these companies are disclosing.
Okay, thanks for that, Bruno. I think, you know, we've seen a few things there, this kind of two-track approach that we're seeing in a number of markets. The one track, of course, is standardizing disclosures for big issuers, listed companies and other issuers of other financial products, but also the standardization of product level disclosures. Avert, we know in the EU you have the taxonomy that came out for products, and I look forward to hearing more about that in a minute, but I'm going to quickly go to Raluca, because I know IOSCO has been working on this topic. Particularly, I know it's a concern of IOSCO about issues of so-called greenwashing, and we live in a world where sort of traditional finance, anybody can create a fund and call it anything they want. You know, it can be the super duper alpha outperform fund, and none of those words really mean anything from a legal point of view. But if I call it the super green, fantastic, I love the earth fund, now suddenly we start to ask questions about that, you know, and there starts to be questions about what does the word green mean in that fund, and are you misleading potential investors in that? Raluca, can you tell us about IOSCO's thinking on this? I know that you're planning on issuing a major new report soon on this, so maybe you can share with us kind of a sneak peek, an overview of some of the recommendations that IOSCO is planning to issue.
Thanks very much, Anthony, and of course, many thanks to James and UNCTAD for this opportunity. With my hat, with IOSCO hat on, I think this is a fantastic forum for emerging markets to keep abreast with the global effort in an area where, and I think everybody is saying the same thing, every day is flashing news. So it really strikes me how much, you know, Brazil as an emerging market and UK as a developed jurisdictions are doing, and these are only examples. Of course, building of how Martin ended the first panel in terms of emerging markets are not waiting. I think, if I may say, no jurisdiction is waiting, and what we are facing now in terms of the dynamic, it is a parallel stream here in terms of jurisdictional policy options and also international standard setting. And I think all of these go hand in hand, and it has been proved to be very useful. We have heard that in panel 1 about issuer sustainability related disclosures, but this is also the case when we are looking at asset managers and further on ESG ratings and data providers. There is no doubt that asset managers are at the heart of the investment chain, and they play a central role in the ecosystem of sustainability related information. Therefore, sustainability related policy and frameworks can therefore help ensure that asset managers do take sustainability related risk and opportunity into consideration and integrate them into their decision-making processes. And this is quite important. We are taking that in our upcoming report, where we'll focus on investor protection issues. And we will be recommending that securities regulators consider setting regulatory and supervisory expectations for asset managers regarding sustainability related risks and opportunity. We had a consultation report that was published at the end of June, and we conducted their public consultation. We have received quite a broad support for this work and the proposed recommendations that we set out in that report, and therefore the thrust of the key recommendations will be maintained in the final report. So no surprises when our report will be coming out. My presentation will be at future tense, of course, because the report is yet to be published. But I think I can afford myself to make some mentions about that, with the reference that the report will be coming out early November. The final recommendations in this upcoming report will reflect the consultation feedback and will cover 5 important areas. First will be about asset managers' practices, policies, procedures, and disclosure. Second, about product disclosure. And this is where, Anthony, you also mentioned the importance of looking at the firm, but also at the product disclosure there. Then the third area would be supervision and enforcement, force terminology, and last but not least, financial and investor education. Of course, all of that will be at recommendations level. It is one report, and further thoughts will be going after that. The report discusses the different regulatory approaches by jurisdictions on asset managers' sustainability-related practices and firm-level disclosures, which are broadly categorized according to the TCFD recommendations, covering areas such as governance, strategy, risk management, and metrics and targets. And again, the panelists so far have mentioned TCFD. They have mentioned these 4 areas, and it is indeed on the asset manager side that's the trend that has been taken, with an important note that on the issuer side, the new climate standard that we are all looking for is building on this framework as well. The report will also outline, very importantly, the types of greenwashing at the asset manager and product level, and it will describe the different regulatory approaches taken by regulators to address greenwashing, and will provide an overview of the financial and investor education initiatives that have been conducted and are conducted by regulators. In terms of greenwashing, which is top of the news, this refers, and that would be a sort of definition that we'll be having in the report, that refers to the practice by asset managers of misrepresenting their own sustainability-related practices or sustainability-related features of their investment products. Of course, we are noting in our report that such practices may vary in scope and severity, and this is quite an important finding because we have been looking from the inappropriate use of the specific sustainability-related terms used in an offering document. We have also been looking to misrepresentations about an entity's sustainability-related commitments, but also to deceptive marketing practices that deliberately misrepresent a product's sustainability impact. So all these will be part of the report, and of course, requirements related to naming for sustainability-related products can help prevent greenwashing by ensuring that products that identify themselves as sustainability-related through their names are accurately reflecting their focus on sustainability. for their own requirements relating to the disclosures of all material risks for sustainability-related products can also prevent greenwashing by enabling investors to better understand the potential risks associated with the product and the impact of those risks on the product performance. The report will also address the risk of greenwashing through other recommendations that aim at both supporting sustainability-related financial and investor education initiatives and ensuring that there are adequate supervisory and enforcement tools to monitor and assess compliance with requirements in this area. The report also highlights a clear need to address the challenges associated with the lack of reliability and comparability of data at the corporate level and the ESG data and ratings provided by third-party providers. The recently published report on sustainability-related disclosures that Mark is very fond of and very close to, and the first panel touched upon in Eric's remarks. And of course, the IOSCO efforts in these areas that have been detailed in the first panel addresses data gaps at the corporate level. And we'll have a separate report that perhaps I will have the opportunity to touch upon later in this panel, to be published also in November, to cover the proliferation of data and ESG rating providers. So in a nutshell, Anthony and dear panelists, the recommendations aim to address various challenges, including the risk of fragmentation caused by divergent regulatory approaches. So let me stop here, Anthony, with these initial remarks.
Thank you very much for that, Raluca. And I just wanted to come back to you quickly. These kind of recommendations that IOSCO produces, their recommendations, can you just briefly, for the audience who may not be familiar with the work of IOSCO, how do your members use these recommendations? We're hearing a lot from other panelists about they're introducing certain measures in their marketplace. I guess they can look to your recommendations to help guide them in terms of the kinds of things that they introduce. Is that it?
It is indeed, Anthony. And as I was saying initially, we are living in a very dynamic environment now where jurisdictions are looking at policy options. And we hope that our recommendations will help that discussion in many jurisdictions. It is indeed striking that this type of discussion is happening both at the developed and emerging market jurisdictions, and we hope that our recommendations will be helpful in that regard. Of course, will be once that report will be out in the public domain, we'll have outreach sessions with our members, and we'll try to make sure that our recommendations are well received and well understood in order to be able to take them into their discussions for policy options.
Thank you for that, Raluca. Yeah, as we heard in the panel this morning, it was said that all countries now, whether they're developing countries or emerging markets, they're on similar footing now as they're all transitioning to a world of sustainable finance and trying to really simultaneously around the world introduce measures to adapt to this. So certainly these kinds of recommendations from IOSCO can be very helpful. Avert, I'd like to go to you. The EU and ESMA has been a real pioneer in this space. I think ahead of the curve in some aspects, and certainly a regulatory jurisdiction that many other regulators are keeping a very close eye on to get ideas from the things that you've been doing. I think one of the centerpieces of what you've done is this SFD that you've put in place, which is around sustainability reporting for disclosures. These are the requirements coming out that it would be spread EU-wide to all member states. Can you tell us a little bit about what success looks like in terms of the implementation of these disclosures, and what challenges that you foresee that jurisdictions might face when trying to introduce these requirements in their markets?
Yeah, thanks, Anthony. So, and good to be here. Thanks for the invitation. So, I think the EU has set up a pretty complex structure of legislation, and it's certainly not finalized. That's also something that I would like to stress. First of all, I think you're right. You have two main themes. It's the disclosure that asset managers have to provide to investors. And that is the Sustainable Finance Disclosure Regulation in the EU. That is both entity-specific disclosures and product disclosures, so pre-contractual and periodical information. Then next to this, you have the need for data for the asset managers to report upon, and that is provided by issuers. And that is where another acronym comes in, and it's the CSRD, the Corporate Sustainability Reporting Directive, which is in draft form, and it should be a follow-up to an earlier directive that requires issuers to disclose various data points. Then next to this, we have the taxonomy regulation, and that is basically, for now, it is only about the environmental sustainable part, and from this only the climate part is ready, and that basically shows you based on various assessment criteria what is green or not according to the taxonomy. And this taxonomy alignment is relevant, for example, in the product disclosures, but also used in multiple other areas. Then on the Sfdr itself, I think you mentioned what are the key parameters of success in implementation. I think there are four. The first one is the proper implementation of the Sfdr itself, because it's not really yet fully in place. So you have the level 1 that is applicable since March 21, but the more granular technical standards are only likely going to be applicable from July 22. So that means is that currently market participants have to apply level 1 rules, which is a bit of an issue. And because of the absence of these technical standards, you also already see various implementation problems. And one of them is a quite surprising one, because the Sfdr is supposed to be a transparency instrument. And in practice, what is happening with products that have sustainable characteristics, the so-called Article 8 products, they're seen as some kind of quality label now, which is would not have happened if we would have had the technical standards in place. So that is one issue. The second issue is that the asset managers under the Sfdr should be able to source the right data for reporting. And as I mentioned, the Corporate Sustainable Reporting Directive for issuers is not in place yet. And the reporting standards are only likely to come in at the end of 22. So in the meantime, there is an issue of a data gap. And I think it shows in general is how dependent the nodes in the investment value chains are. So you need data to report. Issuers need to know what data to report upon, and these issuers need to know exactly the environmental credentials of their own activities, which is not a given, as I can tell. And a similar issue we have on taxonomy alignment, but maybe I'll allude to that later on. The third one is investors actually using Sfdr disclosures. Because this is, we all know that, and I think that's where investor education comes in too, is that it's difficult for investors anyhow to grasp and understand, analyze properly the complex information. And this is complex information per se. We've tried to have the pre-contractual information to investors in a standardized form, but due to the complexity of legislation and the topic, it's still quite difficult to grasp. And the same applies to entity-specific disclosures, that is supplying real data on adverse impact on sustainability factors by asset managers. We hope clearly that these aggregate numbers will mean something to the investor community, because that's the reason why it is required. And last but not least, effective supervision on Sfdr. So first of all, this is a new package of legislation with a lot of complexity and a lot of application issues where it's likely that there will be disconvergence in applications across jurisdictions in the EU. So there is a lot of work required to explain and to align. And the second thing is on effective supervision, because it's also likely that in the combating of greenwashing, where the Sfdr comes in, we will need a different skill set of supervisors in general, because you may need more specific ESG knowledge to understand at least the plausibility of the disclosures that are being provided. I'll stop there.
Thank you very much for that, Evert. There's a lot to cover in there. One thing you mentioned that I just wanted to pick out among the other things was a kind of a data gap, if you will. These two legs of disclosure requirements, one facing issuers and one facing asset managers. You mentioned there's this potential for a data gap if asset managers are required to disclose things before issuers are actually producing the data. Then how do they do that? Can you comment on that? For other regulators that are introducing policy regulation in their environment, in their markets, I presume they should come in with issuer requirements first to be followed by asset manager requirements, or do you try to do them both at the same time? Or what is the European experience with that?
Yes, you're right. That preferably you would have the issuers ready to report, and therefore they would know exactly what the requirements are. Therefore, you need quite detailed standards to report upon. These will all need to be designed and published and approved through the EU system, which is a time-consuming endeavor. But to get the machinery going, you need to start with that, and then clearly you have the data available for asset managers to report upon in their entity level disclosure and product disclosures. That is the perfect situation. In reality, it's much more cumbersome to get to this, because you can imagine that these legislative proposals were started in different phases, and some are slower than others. So then it still has to go through the co-legislators. So you can imagine is that it's very likely that in the startup phase, these standards and legislation that is required may not be applicable in the right sequence, or in the right detail, or in the right application. And so I would assume, despite that you have some leeway or some variables to start the application dates, it's still quite difficult in the beginning to get this machinery going and to get it right. So for me, this is going to be a multiple year product where you have to, or process where you have to get the main ingredients right, and then try to streamline and make it work over the coming 3 to 4 years, I assume.
Yeah. Okay. Now, and I think, of course, there's a learning curve for all the market participants as well as they seek to comply with regulations as they come into force. And we only have about 12 minutes left in this panel, and then I'm going to have to cut it off sharply because we have to. I'm sorry, I have to be the bad guy, but I have to keep this session on time. That's my job. But unfortunately, because I really like this discussion, Ava, when you're talking about this 3 to 4 year curve, of course, part of that is the for market participants to also learn what does it mean. I mean, if they have every good faith intention of complying with all these regulations, it's still new to them. You mentioned also a different skill set for regulators. There's a different skill set for issuers and report preparers. Let me come back to Bruno on this. And again, sort of lightning round answers. Just in a minute or two, can you tell us what is your experience? What would be when it comes to educating market participants? What's a quick 1, 2, 3 lesson for regulators about designing financial and education programs on sustainable finance to help bring them up to speed?
Okay, there are a lot of things to say about it, but I try to be very quick. Regarding the investors' education, I think that the regulator should stimulate investors to understand properly the disclosures that are the entities, the issuers disclosure regarding ESG. and like any other disclosure that they must understand. So ESG is now in the hot topic. So how to read and understand the information disclosed by the industry, for example. Numerous or plenty information disclosed by issues does not mean that the necessary information is being disclosed in this case. So regulators may produce guidance for investors and stimulate workshops to educate investors. And also very important here in Brazilian case, for example, we work a lot in agreements with self-regulators, agreements with universities, with schools, and a lot of education framework here to give education regarding finance and now regarding ESG and other topics. It's very important. I believe these agreements with the education framework of the country.
Certainly, and we've worked with CVM in the past, also doing training programs in your market, or and also, of course, with B3, where of course that's something we work with exchanges around the world on their market education programs, and I'm sure that's something that regulators can take advantage of. That exchanges do have a mandate to do market education, and many of them are now integrating ESG education into that. I'd like to come back to you, Mark. Again, thinking about something you said earlier that I wanted to ask you about, and that was the labeling system that you mentioned. You have this labeling system you've introduced in the UK, in the EU, AVRD at ESMA, they have their taxonomy there. Of course, this is going to be something that we'll see around the world, people introducing these things. Can you tell us about any thoughts that you have at the FCA about harmonizing this internationally? Is this a role for IOSCO to step in, or how do you see trying to, because obviously money is flowing internationally in and out of your market. So it would be good to have these taxonomies and labeling schemes harmonized somehow.
Absolutely, thank you. So first of all, let me take taxonomy and labeling in turn. So in terms of taxonomy, what the UK government has done is to establish a Green Taxonomy Advisory Group, which is run by the Green Finance Institute. That's been meeting for several months now, and what that group is doing is essentially advising government on technical screening criteria for the taxonomy. But their starting point is firmly the EU taxonomy that is the technical screening criteria in the EU taxonomy that have already been developed. So there is an effort there to build from and take due account of what the EU has already developed there. Furthermore, there is, of course, the International Platform on Sustainable Finance, which is engaged in work on taxonomy and considering common ground taxonomy. So there are efforts there to try to harmonize and coordinate, and we're very conscious of that in the UK context. When it comes to sustainable investment labels, I think there is certainly, we've got no interest in reinventing the wheel here, and we are building from a number of initiatives, both domestically and internationally, that have already been active in this particular space. So what we're trying to do is ground the labeling framework in objective definitions and criteria that are understood already in existing frameworks. There's work underway at our British Standards Institution, which is also linked in with ISO, the International Standards Organization. We're obviously taking due account of Sfdr and the approaches taken there to ensure coherence with Article 8, Article 9. And there are other frameworks that have been developed by the CFA in terms of ESG disclosure, Our own investment association has a responsible investment framework. So we're trying to capture all of that existing material so that what we develop has a degree of familiarity and coherence with other and can be mapped to other frameworks, even if it isn't exactly the same. But certainly in all of this, IOSCO has a fantastically important role in driving international coordination. And Raluca's already talked about outreach. And I think in this space, no one has all of the answers. And it's really absolutely essential that we have events like this for shared experience and mutual support.
Well, it's absolutely true that this is a fast-moving area with multiple moving parts. So, of course, it's difficult to coordinate them all precisely. I think, as Evert was mentioning before, this is going to require a few years to work out. Evert, I want to come back to you, and then I'm going to end, Raluca, with you for some last words from IOSCO before we end the session. But Raluca, I think a constant theme that runs through this session is that there are these two legs that we stand on. There's the issuer requirements, there's asset manager requirements. On the issuer requirements front, there's ISSB, which is promoting standardization, but of course, ESMA is already produced, is a little bit ahead of the curve of ISSB and producing its own guidance for corporate reporting. On the asset manager requirements front, there is no equivalent of an ISSB or anything like that. So I'm just wondering, Evert, if you can comment also on your thoughts about harmonization of these standards and requirements on both the corporate reporting side as well as asset manager requirements and taxonomy. How do you see that playing out over the next decade?
Yeah, so on the corporate transparency, I think it's fair to say that this is done slightly differently because ESMA is there only as an observer. This is done through the EFRAG. And EFRAG is advising the Commission on specific standards on corporate reporting in the sustainability area. And again, they need to get going, and they are. And again, the final outcome is expected end of 22. I think the main issue there is, and it has been mentioned already several times before, is that it's so important to keep also the international initiatives in check while doing this, because it's well, maybe Europe is slightly ahead of the curve from some areas. At the same time, sustainability theme as such is not confined to Europe. So in that sense, it's quite important that it all fits in. And I'm sure that EFRAG, in its advice to the Commission, will certainly take all the international work that's been going on into consideration. I think that is extremely important to mention in this context. And I'll stop there.
Okay, thank you very much. And Raluca, we've got 2 minutes left in this session, but I wanted to give you the final word. Clearly, there's a lot going on in different jurisdictions around the world. It's all important stuff. Everybody is sort of feeling their way forward in a rapidly developing environment where there are a lot of still questions outstanding. You mentioned before this new report that's coming out, but you also alluded to another report coming out. And maybe you can just end with a few brief thoughts on the role of IOSCO in helping to promote a bit of harmonization and guidance for their members around the world.
Thanks very much, Anthony. A lot of responsibility on my shoulders now. But I want to end with 2 points. I hope that I will have 120 seconds there. So 2 thoughts here. And first, it's related to the other report that I was mentioning, and I want to do justice to the work that has been carried out there, because as we have seen so far, data is the essential element the entire discussion about sustainability is gravitated around. So while ESG rating and data providers fall many times outside the regulatory perimeter of securities regulators, their oversight is critical there. So IOSCO is planning to issue also a set of recommendations in this space. The report is upcoming for publication in mid-November, and we are trying there to assist IOSCO members in understanding the implications of the activities of the ESG ratings and data providers, and try to help them in establishing frameworks to mitigate risks stemming from these activities. Just very briefly on this report, the recommendations will cover a proposal that regulators could consider focusing greater attention on the use of ESG rating and data products and the activities of ESG rating and data products providers in their jurisdictions. Also, there will be a set of recommendations that will be addressed to ESG ratings and data providers there. Recommendations will suggest that users of ESG ratings and data products could consider conducting due diligence on the ESG rating and data products there. And the recommendations will close with suggestion that ESG ratings and data products providers and entities subject to assessment by ESG ratings and providers could consider improving information gathering processes, disclosures, and communication between providers and entities subject to the assessment. So that was in a very, very rushed presentation, the report that is on the ESG ratings and data providers. And if I may, my last comment is picking up on something that was said also in panel 1, that this entire discussion is not a compliance program. It is definitely related to the real economy. So my main comment here, if I may, is that there should be skin in the game from everyone that is part of this discussion. So all players, all market participants, regulators, and policymakers. So let me stop here, Anthony.
Thank you very much for that, Raluca. And big questions to answer in a short amount of time, but I appreciate that. Obviously, we're not going to answer every question there is on this very big topic today, but I think this panel has really been very valuable for mapping out the challenges that regulators are currently dealing with, but also identifying the progress that has been made, the dramatic progress in just the last couple of years on this topic. So I'd like to hand back to Martin for closing comments for this session. And just to say that the virtual room that this conference is taking place in, we are having another conference in the same room, virtually speaking, at 30 minutes past the hour. So we hope to still end on time. So with that, I hand back to you, Martin. And please forgive me, I've got to duck out to that other virtual room to deliver opening comments for the next session. But it's been an honor and a pleasure to host this meeting, to collaborate with you at IOSCO, and we look forward to continuing to do that through this big multi-year transition as the introduction of sustainable finance regulation continues to roll out.
Anthony, thank you very much. That's the first time I think I've ever been threatened with virtual eviction from a space. So, but you know, there's a first time for everything. Thank you. We will stay within our time, as I'm only going to say a few words. But before you go, if I may, just it's really important that I say thank you to UNCTAD and the WIF for the role you've played here in putting this together. It is really helpful. It's critically important for regulators to be able to share experiences and hear how other people are doing. And you have been great to set this up, and I really appreciate it. And indeed, in listening to the panel, I've got to echo your thanks to Mark and Bruno and Evert and Raluca for the last session. You certainly competed with our first session for liveliness and interest. And I'm a bit conflicted as to say who won, but it's been a very good second session. And I just want maybe just one moment's reflection before we finish, if I may. Look, if we've gone through so many issues here, I think we should not forget that there's a significant portion of investors in our market who, even if there were not a massive transition risk out there, they want to know. They want to know the impact of the investments that they are making. And part of what we are doing is to meet that demand from those segments of the market. And we should not forget that. And that is growing, not only in terms of individual retail investors, but in terms of pension fund mandates and investment fund mandates that have got explicit ESG elements in them. And unless we change the way the market operates, we will not be able to facilitate those investors in meeting their needs. Having said that, that transition risk is critical for all investors. If what we all believe is going to happen over the next years in terms of the orientation of public sector investment and leveraged investment by the private sector actually happens, then that transition risk is huge for all businesses out there. And it would be little short of criminal if the financial markets were not to facilitate investors and owners of companies in understanding what that risk is. And I've no doubt we will be successful in doing that. And I mentioned the third element this morning, which I think is in the why we're doing this, which is there is a massive program of green capital raising to come over the next years. It is going to be critical in financial markets. In the end, we serve the real economy. We are not here for the fun of it. We serve the real economy in the financial sector, and we serve that capital raising requirement as much as we serve investors. And in terms of the how, well, goodness, there's been so many issues raised in these sessions, from fragmentation of standards around the world, the alphabet soup that Eric talked about, to sequencing and how emerging markets are doing that, to questions of timing. Do you start now? Do you wait until a baseline is in place? If you do start now, what do you do that sets you up to take that baseline on board when it does arrive, and to work with other areas where you've got taxonomies and well-developed, apparently well-developed structures in some areas that might be different from yours. So how do you deal with that fragmentation across borders? And I thought what came out really well in this section, I think it was Everett who talked about it, was the idea of the curve of take up by entities, and how you move on from beginning to put those requirements in place to actually putting the facilities in place and getting the market to feedback and stimulate demand in the marketplace. So actually the ecosystem is there so you can do what you've got to do. And we didn't miss out, and I think this is really important, this being a securities regulators panel, the whole question of guidance and support from regulators and what we can do as regulators to make a difference. We can't solve everybody's problems, but sometimes we can get in there with a little bit of guidance or support that will actually make a huge difference in facilitating and oiling the wheels of transition. And then hanging over all of us is this idea of optimal harmonization. How much do we have to move towards either a single global approach or a unified global approach, or a global approach with compatible elements in it in different jurisdictions, so that we don't create excess costs in financial markets in order to be able to continue to trade internationally. I thought all those issues were really well covered in this session. And we did bring out this key issue of data, and I'm delighted that we did, because one of the next steps for us in IOSCO is definitely looking at the whole question of assurance and audit around data. And that is important because it's got to be good quality data, not just lots of it. And, you know, we will look at other areas like carbon trading that are also important, I think, in the future. So let me leave you with this final thought. If you listened into this conference out of mild curiosity as a securities regulator, and you don't think this is on your agenda, well, I've got news for you. You may not have noticed, but it already is. It's critically important. And if you're not up to date and not acting on what you've heard here today, you have a problem. You are behind the curve. And I really want to thank everyone who participated in this conference, because you are not behind the curve. You are clearly deeply engaged with these issues. And that's great to see from securities regulators around the world. Thank you very much. And I'll say good day to you after that. Thank you. Bye now.